The Southern California housing market is about to explode. Make sure you stick around to the middle of this video where we explain exactly what that means and whether it's good for buyers or sellers. Hey there, Christian Walsh, real estate agent with Wire Associates. We've been helping buyers and sellers make the best data-driven decisions in this crazy market, and we're here with another Southern California housing market report. So if you're ready to dive into the single family and multifamily numbers, plus Altos Research Reports for Orange County, LA, Riverside, San Diego, San Bernardino, and Ventura counties, hit that like button. And let's get started. Diving into the numbers, we're going to start with single family data. We'll start with Orange County, and we're going to cover the different numbers. But first, I want to start with the properties that have gone under contract. This is buyer demand. This shows buyers out there writing offers and getting offers accepted. So look at 2018, 2019. Those are more normal years. Pre-COVID. Then this was the beginning. This was ground zero of COVID in 2020. The March 2020 housing market collapsed. We see that crazy drop in demand. And then obviously things in 2021 rallied back, 2022 rallied back, and now we're back to another dip. In most of the counties, we are still above the 2020 dip for pending sales, but you'll have to look carefully. And of course, our email newsletter subscribers get these charts and can play with the data. Bringing in the sold properties, we can see that we are at record low number of sales. Now, this is no surprise because we've been showing you a record low pending sales. So when you have record low pending sales, they turn into record low sales. Now, here's the big difference. If you look at just this, it looks like the market has tanked, and it's definitely down from the number of sales, but you have to bring in the supply, and the supply is new listings. And you can see, again, normal years here, 2018, 2019, the dip from COVID. At the same time we saw pending sales drop, we saw new listings drop. Then they went up, dropped, and now they have plummeted. So we can see that despite the fact that demand is low, we also have low supply. So what happens if you have low demand, but it's in check with low supply? And you can see that the gap between the supply and demand is very close, closer, way closer than any years in the past, particularly 2019. When you have this balance, this means prices aren't going to drop significantly. Now, part two of this report is going to dive into the median home price. Moving into Los Angeles, as far as the buyer demand goes, which is not as low as 2020. 2023 is slightly higher, but still on this scale is at a record low. Definitely, we're almost 2,000 below where we'd be in a normal year. If you look at 2018 and 2019, bringing on our sold numbers are down because pending sales have been down, as we said, and new listings are down at a record low. So we've got to check between supply and demand here. Now, Los Angeles is finally out of eviction moratorium. We've talked about that for months. That ended in March of 2023. So you're seeing the end of the data here. We'll see what happens going into April if we see an increase in supply. I do expect we will see that, but in LA City, they enacted renter protections that are permanent that make it much more difficult for landlords to sell. We are helping landlords there. We have a sales and marketing regional center in Los Angeles now, in Beverly Hills. So we're helping landlords there. So we may see a tick up in supply, but it's not going to be dramatic because LA City has made it difficult for landlords to sell. Riverside, a similar thing. In fact, our pending sales are down slightly below where they were in 2020, but our supply is down dramatically. The only time we had a closer gap between the number of properties under contract and the new listings is here in 2021, which was a raging hot year for sales. San Bernardino, we can see the dip in 2020 from COVID, where we saw the drop in supply and demand. And here, look at how close supply and demand are right now. So we have slightly fewer number of properties going under contract than this time in 2020 during COVID, but we can see our listings are way down. It is crazy how close these numbers are, and they have been in San Bernardino. You're going to see some of the interesting reflected in the median home price when we release it in part 2 of this market update next week. Ventura, one of the places that took a big drop in demand, we're actually pretty much well below where we were in 2020. So the number of properties going under contract is way off, but of course our supply is down as well, so that's keeping things somewhat in check. When you see the number of properties going under contract is lower than the number of sold properties, what that means to me is we're going to continue to see the number of sold properties drop. So that's going to continue to go down below the number here of 506. So in the future, we're going to drop into the 400s. When you see the number of pending sales above the number of sold properties, that's where we're going to see an increase in sales. Either way, the sales are still below where they have been historically. And finally, San Diego, a market that has been accused of being overheated, and things have shifted slightly in that market recently. Our past couple of updates have shown you. But again, another market where the number of new listings and the number of pending sales are very close. So the demand and supply are close together, and that is keeping this market from collapsing as well. If you like our data, you're going to like working with us even more. If you're thinking of buying or selling real estate, make sure to reach out. We have a link below. We can help you anywhere in Southern California. We have an office in Newport Beach and now in Beverly Hills. Moving into the multifamily numbers, so this is 2 units and larger in the respective counties, and we can see they're following their own path. There was a drop in 2020 in the number of properties going under contract, and there is a drop again. The drop now in the number of properties going under contract, the demand, is related to the increase in interest rates, making it tougher for properties to cash flow. Rents have gone up, but when your mortgage payments go up, that is going to eat into your cash flow. So that's what we're seeing now. So demand is down. Supply is relatively consistent, not the lowest it's been. It is lower, but not the lowest it's been. And you can see the gap here between the number of new listings and pending sales is dramatic. 2019 was bigger, but all these other years we've had, it was closer. And that is leading to a market where, unless you're priced right, or you've got an absolutely turnkey building with high rents, it's going to be tough to get your property to move. Or it looks like we're going to start to see inventory tick up for multifamily in Orange County. Moving into LA. LA was the market that was affected by the eviction moratorium. Again, that is ending as of March, so we may start to see a change in the numbers. And we can see the demand is down in Los Angeles, but it's nowhere near as low as it was in March of 2020. And the gap between the number of properties that are listed and then going under contract, it seems pretty consistent. It's actually not as dramatically large as it was for Orange County. It'd be interesting to see what happens to inventory now that the eviction moratorium is over. And Riverside, this is like a mad roller coaster, data all over the place. Big drop in demand in 2020. And we're right around that same level in 2023. We do have fewer listings. The gap between the new listings and pending sales for buildings in Riverside is tighter than it was in 2020 and even 2019, but not as tight as some other years. So this is somewhat of a normal market. We may start to see inventory tick up, as mentioned, as buildings tend to sit because interest rates have gone up and it's making it tougher for them to cash flow. San Bernardino, inventory is down, demand is down, not as low as 2020. So this is a market where we're not potentially going to see excess inventory. The number of buildings for sale in San Bernardino, as we've seen in these reports, has continued to drop from the highs of 2018. That has been a consistent trend in San Bernardino. And the other important thing is the weather in San Bernardino, as we mentioned in the past couple of updates, is going to affect the March numbers. Now, it wasn't snowing everywhere. Those areas that had a bunch of snow, there was definitely not much real estate transacting. So the numbers could be down for listings and pending sales because of that and closings. Ventura, always all over the place, but we can see we actually have a twist. Very interesting. So the number of new listings is lower for the month of March than the number of properties that went under contract. Not as many buildings trade in Ventura because there aren't as many buildings in Ventura. And San Diego multifamily market, we see a big drop in the number of listings. That is down significantly. Demand is down slightly, but it's not too far off of normal levels in 2018 and 2019. So this is a market that looks like it's heating up slightly. for multifamily. It doesn't look like we're going to have excess inventory like we might see in Orange County, for example. We asked you to stick around in the middle, and we appreciate you doing that. You didn't have to wait all the way to the end for the goodies. Well, we told you the market's about to explode. What did we mean by that? Well, it's about to get interesting in California because of CalHFA. They have rolled out a brand new loan program, the California Dream for All Shared Appreciation Loan. And what this does is it gives home buyers, first-time home buyers, up to 20% down towards their home that they can use in exchange for splitting the equity down the road when they sell. This is massive. It will go up to the jumbo loan limits is what we've heard. So in many cases, people can be buying up to $1 million plus homes with this, and they'll be getting 20% of that money from this program. There's $300 million that's been set aside, expected to help around 2,300 families buy homes. This is going to blow up the market. In a market where we don't have enough inventory, there's going to be battles for homes, and I'm seeing it on some of my listings. The listings at lower price points are getting these offers, and they're full price offers, and I expect to see bidding wars. So this is about to explode the market, not in a way that kills it. It's a way that values are going to go up again, and we expect to see this reflected in the April median home price. It is going to get crazy thanks to this loan program. If you have any questions about it, reach out to me and we'll let you know. We're also going to show you now the Altos data and where it's going to have an effect on that market. Take a look. Altos Research Report time, one of my favorite times. Let's take a look. So the first thing we're going to look at is the Market Action Index, and we can see that it's still a strong seller's market, and it's more of a seller's market than what it was last month. We expect that this time of year. Next important thing we're going to look at is the market segments. I always want to show you something new that's on these reports, and what this does is it breaks the market down into quartiles, which means 25% of the market based on the price. And so these numbers here are your median prices within the quartile. And we can see, looking at where the numbers fall, that the California Dream for All mortgage is going to affect these two lower quartiles. We're going to have buyers potentially buying at this point in time. Now let's take a look at days on market. This is a quick summary here. The lowest quartile, we see 21 days. That's very low. Even 28 days is low. So those are properties that are moving quickly at these levels. The other thing you can see is the level of new inventory versus absorbed inventory for the week. So we can see that the number of new properties that came on in the top quartile, there were 17, and 31 were absorbed. So that means that there's inventory being absorbed faster than it's coming to the market. So that's a good sign for sellers. And we see that for all the price points, all the quartiles here, less inventory coming to the market than is absorbed. So we will see that in other counties in SoCal, it's not going to be the same. Moving on to LA, and don't forget that you can sign up for these. These will come to you every week, and you can search for any city or zip code in the nation, anywhere at all. So make sure you subscribe to this, and you'll get the bonus of our weekly email newsletter. Los Angeles is a strong seller's market and stronger month over month. Again, we expect that this time of year. Moving into the quartiles, we can see lower price point for the median price at the bottom quartile, and it looks like the California Dream for All is going to be affecting the two lower quartiles potentially for competition, which means more buyers writing offers and more competition at this price point. Now, their days on market is about twice the lowest number for Orange County. It's pretty consistent for 3/4 of the market, about 42 days on market, and at the top it's 98, so almost 100 days on market at the top. So that is taking longer in LA at the top quartile for things to trade. Riverside, stronger sellers market than it was last month, and not a surprise. And we can see that the California Dream for All loan potentially is going to be affecting 3 of the quartiles here in Riverside, creating more competition. Not moving as quickly as Orange County is in the 3 lower quartiles, but still moving along pretty quickly. The top quartile is faster than the top quartile in Los Angeles. San Bernardino, slight seller's advantage, stronger month over month. And then we can see that the California Dream for All could potentially be touching almost all the quartiles in San Bernardino. We can see that an interesting flip in the days on market. The more expensive properties are taking less time to sell than the cheaper properties. So that's an interesting twist. This third quartile here is moving the most quickly. It is not as quick as Orange County at the bottom, but this is moving faster. And we can see that the new inventory is lower than the amount of absorbed inventory. So a solid market here. We can't wait to share with you what's happening with the median home price in San Bernardino in part 2 of this video. Ventura stronger than it was last month, and we can see that an interesting trend here. The second quartile is moving very quickly, faster than the bottom quartile with days on market, and the top quartile is the slowest we've seen yet, 140 days. That's a long time. Interesting to see that second quartile moving so quickly. And we can see that from an inventory standpoint, the top 2 quartiles, there's more new inventory than absorbed. So we're going to start to see things stick at the higher price points. In Ventura, you're going to see inventory tick up there at the highest price points. San Diego, we have seen this market action index all the way up to 100 during the craziest days. It is down from those peaks, but still a strong seller's market. And month over month, about the same as far as a strong seller's market. Don't see an increase. Looking at the market segments here, we can see the California Dream for All is going to affect the bottom 2 quartiles, and their bottom quartile is moving like Orange County's bottom quartile. And I often say that they're sisters from different misters or brothers from another mother. Orange County and San Diego have some similarities in data. And we can see that the top quartile, we can see that there's more new listings than absorbed. So we can expect to see the days on market start to tick up in the top quartile for San Diego. Hope you found that helpful, and hope you subscribe because these reports are great. Do you think the California Dream for All mortgage is a good thing or a bad thing? Is this going to ruin the housing market temporarily? I want to hear what you have to say. Let me know in the comments below. Subscribe to those Altos Research Reports and get our free weekly email newsletter with thousands of others so that you don't miss another market update. We're just getting warmed up. Make sure you check out this next video so you don't miss a single market update. Thanks for tuning in. This has been Christian Walsh, real estate agent with Wire Associates, and we want to hear from you.